Hello traders, this is Rich Derrick from Tradesight. This is the market preview for Tuesday, February 26, 2013. We had a distribution session this current trading day where we had pretty much selling across the board. We gapped up strongly at the open and wound up closing at the lows of the days pretty much across the board. There were a lot of different things in motion at the time, but certainly one of the keys was the reversal in the Japanese yen that we've been focusing on. We had projected that when the Japanese yen did reverse and start to strengthen versus the dollar, that we would see the market have a fit and see a big round of profit taking in the market. We saw 1 day's worth of it this past session, and we have to just take a look at the internals, which we will in a little bit, to see what may be to come in the future. All right, so here's a look at the ES futures, which had a gap up this morning. You can see here by this high opening. Then we proceeded to drop, took out the prior day's low, and wound up even taking out last week's low to close at a new low here, 1484 area. Certainly undercutting the safety, at least for now, of that 8 ace level at 1500. I wouldn't rule out that this could be gamed a little bit before continuing lower, but certainly this is very notable that we've run up to plus 2 ace, did not frame shift, and now are back down below the key 8 ace level at 1500. Tomorrow very well could put in place a measuring day, but that's a day where you have a range expansion to the downside, like we had today, Monday. We have kind of a measuring day with the bulls and the bears toss the tickets back and forth across the desks before we resume the trend to the downside the subsequent day, which would be Wednesday. That's very possible. The internals aren't exactly showing that yet because we don't have that super high trend reading, but we're certainly going to be on guard for that. All right, now here's a look at the NQ futures. This is where things get a little bit more interesting. We covered a lot of range in the past 5 trading days or so, and what I want to point out here is that while we've had this very flat lateral range here, that we broke out to the high, and now we've broken down and actually recorded a new low close for the year in the NQ futures. Now this is just after recording a new year-to-date closing high just 4 sessions ago. So now we are rolling back down to the downside here. We made a new low close on the year, have not actually recorded a new low, and the absolute terms yet are very, very close. So NASDAQ is definitely one to keep an eye on here for the coming couple of sessions here, because if we get into this gap, there's implications where we're going to have to start running our fibs to see where we might find support, and if we're going to fill this gap that was left over from the end of 2012 to the beginning of 2013 here. All right, now let's take a look at the market internals. Right now we've got to look at the cumulative advanced decline line. On the top we've got the New York, which is just starting to roll down. We do have this potential lower high in place. We haven't yet really recorded a lower low yet, but we're right in that area of potentially turning this chart negative. What we do have here on the NQ side, though, is we have this high water mark. We've got this potential lower high, but now we've qualified that as a lower high because we've taken out the prior low here, and we're actually down below this key support area, which was the breakout level of the high of 2012. So we definitely have a downtrend here in the cumulative advanced decline on the NASDAQ side. So the relative weakness that has been persistent all year is really starting to affect the overall market. Keep an eye on this. This could easily continue lower after a measuring day, perhaps tomorrow. Here's a look at the NDX SPX cross trade. This is the ratio chart. We still have this downtrend in effect with weakness in the overall NDX. So definitely have to respect this. And keep in mind that this is going to have has negative implications for the overall market. Now drilling down just a little bit further, here's the SOX NDX cross. We noted this this key breakdown in the SOX NDX ratio here going back. This is the weekly chart where we had lost this previous area. We had had this relative weakness in the SOX, which is always negative for the overall NDX. But we had this strength persistent for what has been most of 2013 this year so far, but now we're turning back down. We've not reclaimed this key area, So this is a key area of resistance that we're now potentially failing below. So this is one that we're definitely going to keep an eye on going forward. Now the one bright point here for the bulls is the 10-day trend. The 10-day trend is now pushed back above the oversold threshold of 1.35. That's the red line here. We're up into that area where the sellers are potentially going to run out of a little bit of gas here, at least in the near term here, and may need to recharge. So out of all the market internals, the high trend reading that we got on the close today, which was just under 4, is just under 3 rather, excuse me, is definitely one that will be hopefully provide a little bit of support here for the market to give the bulls a little chance to unwind some things here before potentially turning lower here and seeing these other technicals start to really play out in the longer term. Now, as far as the individual sectors go, the XAU was the strongest on the day. It was really the only one that was positive on the day. Was up a little bit more than 1%. It's kind of a safe haven. Try a little bit higher, but it definitely is fairly oversold and could definitely be a recipient of some rotation out of some more risk-oriented assets. So definitely keep an eye on this for potential for upside if we do see some pressure on the overall equities here. The BTK did settle down below the 10 EMA again. It's still above the 50 and the 200, which leaves it at least on an intermediate basis positive. But we've just got to keep an eye on this here to make sure that we don't lose this 50 DMA, which is also coincident with this breakout level here, which is our 6/8 level on the GAN box. This is probably going to be the first trade to target if we expand the range to the downside and continue lower. The hardware index, HWI, was weaker on the day, but was not the weakest of the sectors. It's kind of in that in-between area where we've now got a downward sloping 10 EMA, but still above the 50. CCI is starting to get a little bit oversold, but there's definitely some more room there to the downside. Now the design of the SOX is obviously weak. It was a little bit weaker than the market overall, but definitely not the weakest sector. The more dollar-sensitive stuff really was flipping around much more aggressively than the SOX. The SOX is much more dollar-neutral than some of the broad market indexes that we'll look at later. Didn't take out the prior low. It's obviously not a new low close on the year like some of these other NASDAQ sectors, but we're deep into the count here. On the Seeker, we're 11 days up, so we could get 12 and 13 at any point here. So keep an eye on this one for further evidence that we're going to have a real exhaustion level if we print that 13. Now, the BKX was definitely one of the sectors to watch. It expanded the range from last week to the downside very, very aggressively. Closed just a little bit below the 50 DMA, which is the red line here. So definitely want to keep an eye on that. We're still relatively early in this Seeker setup count. We're only 6 days down now. We're going to print 6 tomorrow when we open. So definitely keep an eye on this. We've definitely got room to fall back to this breakout area. Here's 1 touch, here's 2 touches, here's 3, and we form this triple top, which doesn't exist, as we always say. Broke out of this cup and handle, so that's going to be a key area right in here at the 52 area. So keep an eye on 52 for the BKX as key support. The OSX was much weaker than the broad market, down more than 3%. The OSX significantly undercut the prior trading range from last week. We're down below this key breakout area, which goes all the way back to September of 2012. That was this pivot here that broke this out. We're now looking at 6/8 area for support, which is roughly coincident with the 50 DMA. And then after that, we're going to come into the static trend line about 229 or so. Here's a look at the HGX, which is the housing index. We don't talk about this one a lot, but I wanted to talk about it today because it was by far the weakest sector, down about 4%. Notice the slope of the 10 EMA is very aggressively lower now. We're significantly below the 50 DMA. We gamed it last week. We came down to touch it here in this range expansion candle to the downside. Had 2 small measuring days, and now we've continued through to the downside. This is definitely something that we have to be on guard for the overall broad market. These little measuring days now that we might get after this range expansion to the downside Once they release to the downside, they can be very powerful, move very, very quickly. Key support's going to come in here right around this 171.5 area, which was the this prior high here. If that gets lost, then we're going to start looking at the static trend line, which is a little bit lower down, 166.5, somewhere in that area here. All right, now here's a look at the VIX, which is definitely on the move. Took a huge pop today. VIX was up some 34%. This is the cash VIX. Just an extraordinary move to the upside here. People scrambling for short-term protection in the market, so we definitely have to watch this. We're up into the 4-ace area, which is a very notable area, one of the stronger GAN levels, so definitely want to make sure that we don't get too caught up in the long VIX trade just yet. Had a little long scalp this afternoon, but we got to make sure that give this thing a little chance to kind of recharge and then get back on board with this thing if this does want to go up and take a shot at the static trend line, which is right up around this 22 3/4 area on the chart. And one of the other notable movers today was the TLT, which is also a safety trade. So money flowing out of the risk-on assets into the risk-off assets. TLT is definitely one of the chief suspects there for that rotation. We had a really strong move in the TLT to the upside, decisively closing above the 10 EMA and even taking a shot at the 50 here today. 4-ace level is 118.75 on the daily here, so that's a big area. But just make sure that you understand that we just printed a 13 exhaustion here and really have a lot of room to run if they so choose to continue to pare back the risk exposure and pick up TLT as a hedge. All right, as you'd expect, oil was weaker on the day. We're 6 days down, 7 days tomorrow on the oil chart, so definitely keep an eye on the 200 DMA, which is right around $90 now for key support in oil if they continue to take risk off in that area. The other chart we want to keep an eye on is gold. Gold could be a safe haven. We've got this little pattern in here. Actually, let me flip this to the GDX so you can see the gaps. The GDX has this little mini pattern in here where we've got this little island set up right in here. 3 days, 1, 2, 3 in the island, and a fourth, just kind of a little doji. We went up to tickle this this level right here. We've got a 9, 13, 9 in place. Here's 9, then 13, then 9 down. So we're into this new 0-ace level at 37.50. So it's really key support for the GDX. Keep an eye on a breakout above this little cup and handle, which is starting to form in the smaller time frames. We were playing with this today in the smaller time frames, looking for a push up into the close, which we did get above this previous high. So keep an eye on this. Here's your cup. They made this little handle here, and it did push above it and break out into this area. Here's a little better look at the that island. The island is right here. Went up, pushed up above it, fell back a little bit, but this is definitely an area to keep in mind. This gap going back to the 19th of February is still open, and that's not going to fill until we trade up into the 39, 35 area. So definitely want to keep an eye on there. So that's going to be it for today, folks. As always, thanks for listening, and this has been Rich Derrick from Tradesight.